Okay, we are going to start in a few seconds. Good morning, everybody. It's 8 a.m. Eastern, that's New York time. Welcome to Wednesday, the 13th of December. That's the final Fed day of 2023. Morning, Marius. And yeah, without further ado, let's get the disclaimers underway. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, right. With that out of the way, we've got a zoomed out picture of the two heat maps. I think I've got the font settings okay today, so everything's fine. Let's quickly get onto the slideshow. This being Wednesday, we're going to do more of a technique session. We are going to stream the PPI release at 8:30. Our friends at Financial Juice should be live, hopefully on the YouTube audio and hopefully on the Discord audio as well. Anyway, I hope everybody is having a really good week. Let's do that slideshow. Okay, just the key events, the important 3-bar events. We've got the set of the PPI. There's quite a few individual PPI releases, but effectively it's one release, the PPI month on month at 8:30 New York time. Then you've got the Fed interest rate decision at 2 o'clock, and just as important, the press conference at 2:30. So yeah, it's the rate itself and then their dot points and whatever words are in their statement. So that's when the fireworks are going to begin. And yeah, even though I won't be talking at that time, just bear in mind that the first move is often to send you the wrong way. That's kind of the way that that FOMC works in the afternoon. It's about 3:30 a.m. my time. I occasionally do get up, but I doubt very much I'm going to get up tomorrow, or tomorrow my time, or today your time. Okay, let's keep moving with the slideshow. Okay, this is the daily, so you can see we're continuing on this theme that we were talking about for the last few days. Essentially, we're in a range after a big move up, and we're getting towards the year highs in ES and NQ. So as long as we stay in that range and until we see some real down movement, it remains bullish. This is also reflected. I've got a 5-minute chart. I haven't even bothered to show yesterday's session on this 5-minute chart. This just shows you how strong and how range bound the action has been in ES and NQ. NQ on top, ES below all day in the ETH session. ES here is only 5 points worth of range so far, which is absolutely minuscule, about a quarter of the expected range or the average range. And you can see that we're staying well above yesterday's high and settlement in both ES and NQ, and they're basically in a holding pattern pending these economic releases, and especially the Fed one this afternoon. So nothing really surprising there. Okay. For the TPOs today, I've just got the screenshots because there isn't an awful lot to do in terms of aggregating the individual profiles of the last few days. We've basically broken above the extended profile of yesterday, and we're in this tiddly range. What I have marked on, and you can see this in Bookmap when we get back to the Bookmap, is the options open interest for the 4,700, 4,650 and 4,600 SPX options. There's currently a premium of about 53 between the March 24 futures and the SPX, and I've just got them there just because there is a large amount of options interest at those 3 strikes. So that's just there for interest. That will not reflect the change in live options OI during the session. In fact, it goes really live at 8 a.m. as in now. but yeah, there are some services around that do that. This is just general information just to show where some of those may be positioned at longer term. Okay, NQ again, just a screenshot of the TPO, and you can see, yeah, we're well above the extended range, and we've just been rocketing up, and we will talk about that in a second. Okay, just on the range side, on the relative volume side rather, 73%, low considering we're in the middle of the week and we've got these economic releases, but then again, not unexpected because we have those major releases, especially the Fed this afternoon. So again, this reflects that we're in a holding pattern, and you can see actually ES is 6 points now. I lied. I thought it was 5. It's actually 6. Wow. But it is very, very small. And just a quick snapshot of what has happened in pre-market with the underlying stocks. And the only point really to note here is that there's nothing bearish. You can see Microsoft's had a nice bump up, and so has Google, but there's nothing bearish yet, so nothing is really moving to the downside in pre-market, which again is consistent with the fact that we are in a range. Okay. As always, morning Tom and morning Stan. As always, if anybody has any questions, feel free to ask either on YouTube where I can see the comments, or in the Discord channel. Okay, and since this is a technique session, we're looking at the two heat maps. I will again explain what is present on these heat maps. By the way, you can see that option open interest from the TPOs there in purple. I'm just pointing it out. That's the 4650 SPX option strike. Right, so I have a dimmed out heat map. You can see the slider here in ES sliding all the way to the right to show that this is the least brightness possible. If I slide it all the way back, you can see the difference between maximum brightness and minimum brightness. Okay, when you are zooming all the way out, and we've got about 70 points here, you can see on the vertical range of 70 points. It is easier to see if you do have it dimmed out when you are zooming this far out. And the reason we are starting off with a zoomed out picture is to give a high level perspective of where these sitting orders, which may be magnets or support and resistance later on, have been present. So if we scroll all the way back, both in NQ on the left and ES on the right, you can see where liquidity has been. And if we start with ES, you can see this order at 4721 of 250, and I've marked that options interest for the 4,700 strike up above, but that's where the liquidity is at 4721. If we zoom out a little bit, you can see that they're beginning to add some more liquidity below, so they're hedging their bets. But in terms of liquidity that has been there all day and that has bounded the price action, it's the 4710. So you've got 200 there, you've got 250 up above, and that's essentially where they've been. And we've been in this range. And if we zoom vertically, let me just get that on, and we go back a bit, you can see that, yeah, that they have essentially had a liquidity resistance up about the 0525 and below at the 4,700 itself. So that has essentially held price. If we actually look over at these two columns, so again, so this is just a heat map. The only add-on that is present on this heat map, by the way, this is unfiltered. This is just the bog standard ES heat map. The only thing on here is the stops and icebergs, and if we look at the settings for the stops and icebergs on chart, you can see that we're just filtered by 50. I don't rely on it heavily, but I do like to see the larger MBO stops and icebergs. So that's the only thing that is present there. There are no volume dots, there are no volume bars. As I explained a couple of weeks ago and again last week, I've got access, and I'm sure most of the people watching this have got access to things like a DOM with columns that show you how many orders are hitting above and below. They've got volume bars on whatever software they use. I've got Sierra, but Bookmap, for example, has got the Trader DOM Pro, but you've got Ninja, you've got IRT, you've got all sorts of software. Even TradingView's got volume bars. So I don't feel that there is tremendous need in this session when I'm really talking about how I use Bookmap and how I use it to see a clearer picture, to cloud that picture. Sorry, my phone is now on silent. I was unaware it was not on silent, so apologies for that. But I don't see the need to over complicate the picture by having lots and lots of bubbles all over this heat map. What we want to see is price action on this heat map, and when we zoom in we'll see that, and also where this liquidity is tracking and where it's stable. So that's why that's there. In terms of the columns, we've got the order book column, which is just the numbers. Again, you can configure these exactly as you like. So if we go through the columns, I'll just explain what they all are. Again, I'm doing this as a technique session. So this is just the order book, and it's just the numbers only, and it's showing both sides, and it's the extended order book, so it's the whole order book, which in NASDAQ's case is probably about 800 levels. The next column I have, which is this one, it's called EX because it's a cloud note which is linked to my execution chart in Sierra. So anytime I draw a strip or a rectangle and give it some text, it appears here. And the next one is from my TPO, which you saw, and that's again where I draw rectangles and give them some text. They appear in this cloud notes column there. The delta and the volume profile. So the delta, it is the volume profile, but with this delta box ticked. So this is showing the ask volume, the ask volume versus the bid volume differential, and I'm showing it bars only. So for this purpose, especially for the technique session, I don't want to cloud this with having numbers. I just want a graphical picture so we can clearly see where we have fuel. So when we start talking about strategy and order flow, this is the column that gives us a picture of the fuel, and the CVP is the chart volume profile, and this gives us a picture of the actual auction that may be happening. And I like talking about fractals of auctions. So if we zoom all the way out, you can see you've got this quite balanced normal distribution type auction, which is over here. I mean, if you make it a bit bigger, you can see it sort of maybe in exactly the same as it appeared in that screenshot I had of the TPO. It's basically very, very similar in terms of its graphic presentation. And with NQ, if we did that, let's just blow up the NQ, because there's more that's happened. With NQ, you're always going to get more action in the ETH session, so that if we look at, again, we've got one balanced profile overall, but within that, for example, if we zoom right into the current little bit of action there, and if I try and get, you can see it's relatively balanced. It's a little bit poor on the south side, so it's a bit heavier down here than there, but you can see within that the fractal of the current auction, and if you zoomed right in, you get a nice short in terms of height balance profile. But again, it's showing you those fractals. And one of the benefits of having such a clean representation of this heat map that I like in NQ is also that you can drag this left and right. I'm just dragging it with my mouse by holding the left click button down to have a look at other auctions. One of the reasons why you might do that is back testing this concept of fuel that I talk about in this channel, and see whether, where you have a trapped set of sell volume, and again that we've got no numbers here, so we're just doing it purely on the delta visual representation, whether that then acts as a trap to provide fuel to go up. As both I and my colleague Tom state quite often, price goes down to go up and price goes up to go down, and by that we mean it goes down to get this fuel to then go up. So if we go up to where price went up from, and we can always zoom right into this. It's probably best to actually get it from where it was topping it there. This is not a very good example, but quite often you'll see a long green tail, and that will then provide the impetus or fuel to get back down. Okay, I've got to do a time check because I know we are on a tight schedule so we do not miss the 8:30 news release. Okay, so let's just blow that back out. Make sure that's not too wide so that we can still see all of this, and zoom all the way back in. So if we just quickly look at where we are. So we're in this balance that I mentioned on NQ. You can see the range really, it's really tiddly for an NQ type range. It's essentially about 611.5, 612 down to 604. And for NQ, that is remarkably small for it to stay in a range like that for over 30 minutes. That's quite rare. That tells you that it is most likely in a holding pattern. Whenever I start using words like certainty, I have to correct myself. There are no certainties in this game. This is a game of maths, probability, chance, good luck, bad luck. And a lot of it is about protecting yourself from the bad luck that can happen. All you can do in this game, in my view, is develop a strategy which has clear edge in terms of it gets you more money than you lose when you're right, and that you have a strategy that you believe shows you things that you're more likely to be wrong than you are to be you are more likely to be right than you are to be wrong, even though you can do quite well if you are exactly 50-50 in terms of right and wrong, or even less than 50-50. Psychologically, it's quite hard to deal with a winning strategy that is, say, 30 or 40% win rate, even if it has great big wins. Just it does tend to grind you down if you are a day trader rather than a multi-day swing trader. Okay, all right, let me just quickly flip through some notes. Come on. Yep, macro strategy order flow. So just a reference for me to talk about. By the way, this is the NQ unfiltered. And for a change, this is actually quite legible. Or normally we've got these algo bands which are just above and below. You can see them at about 8 or 9 points below and 8 or 9 points above, and they absolutely dominate the heat map. But at the moment, you've got some really heavy liquidity, which is more dominant than those algo bands. So that is quite apparent. So you can see if we zoom out, that you've got these liquidity bands here at 13. There was one at 20 which has been ditched, or they're mostly ditched. One at 33 that's gone, and there's some new ones below at 580 and 576, and that probably equates with what we are seeing over here in ES with these new liquidity bands that went in about the same time. So if you can see the vertical cursor that I've got, which is saying at about 5:40 a.m. New York time, those liquidity bands went into place at exactly the same time in ES and NQ. When things like that happen, you take note. You don't say, oh, great, there's liquidity there, it's definitely going to go there, I'll take a trade now. That is not what you do. You stick to your strategy, you stick to your setups, you stick to the game that you have been playing that is making you money, and you just build those into your observations of the market, and maybe they will form part of a target, or maybe there'll be an entry if you're going along later on during the course of the session, whether it's the next hour or during the RTH session or this afternoon's Fed release. Who knows when or if those liquidity bands below are going to be tagged. Okay, macro. I was alluding to talking about macro. I don't think in day trading you can really even apply a strategy which is as good. You might be the world's best scalper. You might be somebody who's really good into quite small swings. I'd call sort of my style sort of more smaller swings, not tiddly little scalps. I'm not going for a point or 2 points in ES or NQ. I'm going for larger swings than that, but it's still relatively small swings. I don't think you can execute that kind of strategy without having some understanding of the macro environment that we're in. And I do like to talk about that macro whenever I can in these sessions, just so that people do take the time to make sure they're abreast of what's happening and that they can find sources, just quick summary sources to help them, determine what that macro is. I mean, whether it's like a one-pager that you read on Substack, or there's a certain couple of Twitter feeds that you read, or or you're a full-blown macroeconomist and you read 1,000 articles a month. It really doesn't matter too much as long as you have a relatively good inkling of what is happening. And what is happening, apart from the fact that we're in OPEX week, so we've got option expiry on Friday, the monthly options expiry that is, we are in a period of euphoria, or relative bullish euphoria, where the markets believe that the interest rate cuts are coming. It's a bit like that Green Day song, "The Saints Are Coming," after Hurricane Katrina in New Orleans. But yeah, the market believes the interest rate cuts are coming in 2024, and so they're pricing in a big move to the upside, and that's effectively what we've seen if we look to that daily, and we see we're at basically multi-month highs. One point to note when the market does get euphoric is that euphoria can last a lot longer than common sense might prevail. So you might think, surely it can't keep going up now. It can't keep going up. It's completely ridiculous. Whatever opinions you might have, they're irrelevant. If the market on an auction basis is auctioning upwards, based on euphoria or whatever, and it is finding buyers, it will continue to auction upwards until exhaustion is reached and nobody else wishes to buy up there. It does not appear that has happened yet, but you never know. Maybe this afternoon, if the Fed say something not as bullish, or suggest that there may yet be another interest rate rise, who knows what hell may break loose. Quick time check, 8:21. Okay, so we've got about 7 or 8 minutes. Okay. So there's that. And the other piece of macro news that came in the last 7 days is that whilst people believe that the US is going to begin to cut interest rates early next year, Japan has signaled the absolute opposite. So if you look at the USD JPY exchange rate, that the USD is going down, the Japan yen is going up, and that seems to have had a bullish effect on stocks or equity indices in general as well. So you've got that sort of compounding the view that interest rate cuts are coming in the US. So that's the cherry on top of the cake. So that's my bit of macro, right? In terms of what I'm looking for in my trading plan, my strategy that I've been talking about session after session and week after week in these webinars, I'm somebody that believes in auctions, auction theory, supply and demand, Wyckoff. It's all essentially the same thing. So I'm looking for price exploration through value. I'm looking to see where is the auction, and if we're in a balanced environment, I'm looking to trade the extremes of the ranges, and if we're in a trending environment, I'm seeking to go with it and be very, very careful with fading it and not holding on to trades that fade a strong trend move, lest I destroy my trading account. Okay, so let's have another look as we talk about that. So we talked about that. We talked about in terms of strategy itself and setups. I've described a few of the setups that I look at, and I've got favorites, like I've got the swing failure patterns, or the breakout failures, or the springs are up press, whatever you'd like to call them. I've got tests of a range, or tests of the supply demand zone. It's essentially the same concept, the two that I don't tend to talk about, and I won't talk about too much in these sessions, are the concept of breakouts, which I do not do very often because they don't tend to work out very well. And pullbacks, I'm essentially doing my pullbacks sort of a fractal within a fractal. So I'm using the same strategy I've got for a range, but in a smaller fractal than the bigger fractal, which may be trending upwards or downwards. So if you get what I'm saying, I'm going down a time frame to see the kinds of setups that I want to get on board the trend. Okay, let's have a look. Okay, and finally on our technique piece, yeah, let's talk about order flow. Right. Again, just checking that I've got. Good morning on YouTube, Majdi Salome, welcome, and yeah, good morning to you. So I hadn't scrolled down to see the chat. Okay, order flow. Right, order flow is a nebulous, non-objective term, which means a million different things to a million different people. And if you go on the web or you go on YouTube or wherever you go to get your infotainment or your education, you will see completely different meanings. I would treat the word with the two words order flow, as literally that, the flow of orders. So I see it as mainly a time-based motion of orders, and in terms of what I'm looking for in order flow inside Bookmap that I've been talking about before, is I'm looking for little vicious slips up and down, and I'm looking for fuel on this side, and I'm looking to see where the liquidity is moving or is staying the same. So that's essentially how I'm using order flow inside Bookmap. Maybe as we talk about individual setups that come into play during this session, if you haven't been to some of these sessions before where I describe what's happening and what's likely to happen, and I try very, very hard, and I fail sometimes. I try not to predict the future. What I try and say is that there is a strong probability that we will go in direction A or direction B, but you'll get the idea of how I actually use that order flow. So I see it mainly as a time-based flow of these orders. I do also believe that I have a very short-term time frame chart in Sierra that I look at in conjunction with this. I love the way that Bookmap has it because you can zoom right in and you can see these little vertical moves up and down. So you can see this one in NQ, which you see this move here in NQ where my cursor is. That's a vertical move, and that is often retraced and has already been retraced here. In terms of auction theory as to why it might be retraced, it's one theory might be that the auction did not properly occur because we just slipped through a whole bunch of prices without having a proper auction, and that's one of the reasons why it often comes back. But I'm sure there are other theories as well. So that's one of the reasons why I like looking at the minuscule time frame based price action in Bookmap, and I prefer that to using any indicators. Again, as I've said before, I have coded a lot across quite a few different platforms, coded a bunch of indicators. I do not use them. I do use short-term time frame charts like Bookmap and in Sierra, and I do like looking at other ways to see these auctions or fractals. So whatever other types of bar period that you occasionally look at to get a slightly different angle on that. For example, point and figure or reversal or Renko or range or Ks, whatever it is, just to give yourself a different perspective on the auction that is taking place. Sometimes having that different type of time period helps you better see the overall balance distribution and also where people are getting trapped. So that's one of the reasons why I use them. So whilst I do have that daily TPO there, I've got smaller fractals of the profile to help me better see what is happening. But as I say, you don't need those. You can actually do that within Bookmap with this column here, the CVP, and by zooming in and out of the chart and dragging it left and right to see those fractals as they occur. Okay, so let's have a look over here at Time. Okay, yeah, let's better turn that feed on. So that should be, I'm just double checking the stream. Yep, it's got the browsers on. So, okay, I'm going to just turn that up so the volume of Financial Juice will be a little bit louder, and we are 50 seconds away. My trading engine is not on. I'm saving my bullets for later today in the RTH session, the morning session that is. I'll probably be taking small to medium swings, but I am not trading this, so I'm just observing what is going to happen. See, we've seen that a lot of the liquidity, the close by liquidity, has been removed, and they have, yeah, they've taken out most of the liquidity. You can, let's zoom out. You can see the liquidity bounding 4680 and 4721. So let's just see what happens. We'll try and focus on ES. And we've got about 10 seconds left. Very small iceberg, sell iceberg just above, and we're at this options open interest level. Okay, so that's annoying. The chart zoomed in on me, so I have to get rid of that. I'm trying to draw the scene of the crime, so let's try again. Let's hope it doesn't slip on us. About there. And I think we need to zoom out in ES to really draw it. So we'll try it again over here. Hasn't been a big move in ES. Essentially where that iceberg was at about 4704, and we're retesting it already. So what we do on some of these news releases is see where exactly, or the price level or zone that the release came out in, and see if there was a move away, or, whether it's up or down. If it's a significant move away, we consider a crime to have been occurred. In other words, something happened to cause the price action. I'll just turn off that feed now. And that's why we mark with a cyan line where that crime occurred, because it's quite often a good reference point. It'll often be tagged, even if we have a trend up session, and it stays above that. It often comes back to just tag it, and then if it does go back to the other side on this side, if it goes to the south side, i.e. below that line, that gives us market generated information that the scene of the crime itself is not holding. Occasionally that won't provide good information. Occasionally it'll wick up and down, backwards and forwards across that scene of the crime, but that does not usually happen. So here NQ has provided a much better scene of the crime than ES, even if we zoom in vertically. So we're holding that. We broke through the liquidity that remained and was retained at 16,613.25. And it is exploring up a little bit. There's no resting liquidity, so these are all just algo bands. Whereas this liquidity at 4710, which got put back, you can look at as resting liquidity. When I use that term resting liquidity, I put more weight on it than I do algo bands. It's because there is a higher probability that price will approach it. It doesn't have to tag it. We're just talking about approaching it. So in ES's case, that's within 1 or 2 ticks of that liquidity usually. Because NQ is such a thin instrument, that 1 or 2 ticks doesn't really apply. So if it was within a point to 2 points, that's just about the same thing. And you'll see me zoom in and out on that heat map to try and get some better visual clarity. So I'm trying to get clarity on seeing the heat map better, and I'm also looking to see what we can see on these delta and profile or auctioning columns. So if you look at ES, we're right at that scene of the crime level. It wasn't much of a crime. That's like 2 points. That's not a real crime. And we're back underneath it, and NQ, we're about to tag it, and we have tagged it, and we're now underneath it. So at this point, let's have a look at those liquidity bands that were placed at 537 below. You've got that. You've got two key levels there: yesterday's high and settlement T+1. So that's interesting as well. It adds confidence to the fact that we may get a retag of that at some point. Again, we're not expecting a tag right this second. Things take time to play out. I mean, even if you trade NQ, where you can, hit your targets in about 3.5 seconds sometimes, patience is still a tremendous virtue with trading NQ as it is with the ES. If you wait and you wait until you see that fuel in place, the trap buy fuel or the trap sell fuel, you may find that your maximum adverse excursion, which is how far into the hole you go on a trade, will be less than it otherwise was, just simply because you are patient. Okay, so we're now under that scene of the crime for ES and NQ. I mean, this whole point about having something within a point, so we don't look at individual price lines as one price, it's a zone. So the fact that it only managed to break the scene of the crime by 1 point, and it only really did a spring of this little swing low there, that in our eyes should be that it is holding the scene of the crime and it remains bullish from that news release. And looking across at that US PPI, so it was 0.9%. I mean, the actual numbers don't matter to us as day traders, but it's red, in fact, because it is less than forecast. It was forecast at 1%. But after the price action has settled down a bit, or sometimes when I get a chance straight away, I always have a look at it just to see, it was worse than expected and the market was bullish. It is market generated information that the market reacted in that way to essentially bad economic news. In other words, why is the market reacting like that? Because the market likes anything that currently that is bad economic news, because it may believe, it being the larger players, whoever control the market or who have the pockets to provide stronger price action than you and I on the retail side, they may believe that that means we're more likely to get those interest rate cuts next year, or less likely to get interest rate rises. So yeah, that's been a consistent theme over the economic releases over the last few weeks, that it does not matter if it's slightly worse than expected. The market likes it. You could also say that it didn't really matter. It could have printed anything at all, and most likely we would have had a bullish reaction, and that probably can be considered true as well. Only if it had something that was completely out of the ordinary by way of that release would we have likely got a bearish reaction. And that is the macro environment that we're in, and that's why it's worth bearing in mind, having some knowledge of that environment before you get to these news releases. Okay, time to zoom out a bit and have another look. So let's actually get into the fuel on the ES side. So let's blow the ES up, and so let us look at this move from 830. So we're going to try and get it across to 830. This is where we're using the power of an infinite scroll mouse with Bookmap's amazing microsecond, millisecond feature. So what we're looking at here is the fuel at the top. So the idea is that the visual representation, even though it's relatively balanced in terms of the profile, you've got this nice, let's draw, we haven't actually drawn at all today. Let's change colors to that color. So you've got this nice bit of green fuel, buy fuel, potential trap buyers to get us to get the fuel to get down to that scene of the crime. So that's what I'm suggesting with the way that I've set my Bookmap up. I'm looking to be patient, and I'm looking for scenarios where I have a potential fuel trap which lines up with the direction that I'm going in. So for that, I was looking for a fade back. I'm not trading right now, but I would have been looking for a fade back to that scene of the crime. Let me just get back on the cursor. And that, as we zoom out a bit, you can see, let me just get rid of that. You can see the potential trapped fuel to get us back down to this level. Again, this is a game of probabilities and R multiples, and the question is, did you, if you were trading towards that, did you have a tight enough risk to make that trade worth it? And if you're trading within in NQ, you're more likely to be a price fighter, and what that means is you're not going to take a trade unless there's a really good prize involved, because there are so many opportunities in NQ, both in ETH and RTH. And so why are you going to take something where the actual R reward might be only 0.5 of an R? What I mean by that is that if we draw where the risk might be up there, and then you've got a reward there, that might be twice as big as that. So is that really worth it? And the answer, in my view, is no. But that's just to give you an illustration of why that delta fuel can be useful. Let's just fast forward to now, because just having another look here. Okay, so by doing that, I completely missed what was happening in NQ. So we had something that's been quite rare recently, which is a large resting sell iceberg in NQ that absorbed enough buyers to give us a really, really good move. So what I was talking about earlier was going down a fractal. So that if you go down to a fractal, and we haven't got a specific time frame on this chart, but say we're going down to a fractal of a time frame. This is still it's a double top and then an up thrust, a breakout failure up into both a sell iceberg and into liquidity above. So one of my favorite trades, and I'll draw this again, I'll draw it to the upside this time, is where you've got thick liquidity just there. You've got a swing high, and then we just take out that swing high, and we stop just short of that liquidity, and then we go down. That's where you're using the power of Bookmap together with a traditional supply and demand type setup. Okay, let me just ditch all that. So in this circumstance, as opposed to one ES, you do have a tight stop. So if we're going to draw this on again, so you've got to say that essentially is where you would have got in around about here. So we'd draw that across about the 624 level, and you could have had a nice 5-point stop there, and it's already gone the 10 points. So you've got 2R out of that if you had been stalking it. Again, this is about patience and preparation. It is not about chasing. The trade is up there. It is not here, all the way down here. The R, the risk to reward ratio, is a live risk to reward ratio, and you take the trade down here, it's a much worse trade than it is up there. It may be scary up here, but we're not playing this game based on fear. We're playing this game based on mathematics and the intention to try and earn more money than we lose. Okay, so NQ. I mean, you'll often find when I'm doing these webinars that NQ is going to give us a lot more to talk about and a lot better price setups at this time of the day. Sometimes ES is really, really good at this time of the day. Today, it does seem as if it's waiting for RTH and the Fed release. But NQ, the only setups, I took one short earlier today from a trading range extreme, and there's been nothing else for me. ES has given me nothing, and I refuse to trade for a point. It's just not my bag. Okay. another time check. So we've got about 15 minutes left. So again, if we're going to talk about how we'd use Bookmap and we'd use this delta column. So if we're in this trade here, and we've used this little trap of fuel to give us a trigger, and we've got this scene of the crime, or the zone, the price zone of the scene of crime, not the exact level of 16,610, but the zone. So you could say it's already got there because it got to 11.5. What we're looking at here is this red delta tail on this lower half. Because, as I said, we're talking about fractals upon fractals upon fractals. So if you go down to this kind of fractal, so we're going down a time frame, you can see that this is a tail to get people on such a tiny time frame a long, right? So I'm not suggesting that it's going to go long for very far, or that it might not get back down to the scene of the crime. I'm just saying that it's this concept of a fractal within a fractal within a fractal, and that's why you might want to use other bars in addition to very, very short time frame bars. Okay, and here we've got another Bookmap feature that I like to talk about, and I do quite a few screenshots in the room, which is if this was ES and you've got a resting sell iceberg and it's already got 78, which is a lot in NQ, that becomes a target. So even though it's also a trigger for a short, which would have got 2R if you had taken it in the right place, it becomes a target for a long trade later on if that stays there. Again, nothing works 100%, but there is a good probability that these sell targets of resting icebergs above price do often get filled. Why? Because on auction price theory, they're advertising that they wish to conduct more trade at that price level, so that buyers and sellers will then auction back to that price zone or that level, so that that trade can be conducted. So that's why that probability works out. Whether the probability that it does work out, the statistic itself, you have to look at that yourself in your research. I'm afraid it's one of those where you have to do a manual back test, and you have to go through your charts and note down when they occurred, whether they got filled, whether they didn't get filled. Were there any characteristics which said they were more likely to get filled than others? But I've certainly found that if we were talking about ES rather than NQ, it's a good probability that that would get tagged. In NQ, this is quite rare that you have such a large iceberg and then you've got this nice move away and then you've got this target above. So if you were to take that trade, what would you do? You use this sell fuel as your trigger. You'd have used the scene of the crime potentially, or just about there, as a stop level. So again, maybe you got in around about this level, say 14, and you've got a 5-point stop, and you're targeting right up to this level this time. So you're trying to get it tagged. So you're looking for an 11-point target. And again, if you get within half a point, it is in your own interest to scale. So if you're expecting a perfect tag every time after you've got 2R on your trade, you're going to find sometimes that goes all the way back and you lose that 2R. And that's one of the reasons why I'm a strong believer in scaling. Also, if you're trading ranges, let's draw a range here again. So if you're trading ranges, I'll just draw one over here. So you've got a range high and a range low, and you've got a mid, and price might go backwards and forwards and forwards. Quite often it might just do that though. So that if you go long there, targeting the top of the range, it'll get the mid and then it'll come straight back. And if you haven't scaled to that mid, you've got nothing, even if you had a very, very tight stop. So there are lots of reasons why you would scale. There are lots of reasons why you wouldn't scale. But what you do in your trading plan and your strategies and your execution of your setups is up to you. What would I have done in this scenario? Yeah, I would definitely have scaled by 23.5. I think it's likely that we will get back up there. I'm looking at especially since this is the high of the day, and I'm looking at the total number of contracts traded at the high, and I'm seeing 107. So I haven't got I have not got a volume number column in here, but I'm just looking across in CRO and I can see it 107. Ordinarily, that is not likely to be the final high of the day for an NQ session. It'll be a smaller number than that. But anyway, it's quite often it will toy with you. It will get to within half a point, and then it will move away, look for fuel, and again, if you're looking for fuel to get to the upside further, you kind of have to go down a fractal to see where that fuel is developing to see if we can then get back up. Part of me also then wants to zoom out again and have a look at this liquidity here at yesterday's high and think that if they can absorb enough buyers into this liquidity zone here, 25 to 27 to 30, that may increase the probability that we will get down to this 16,580 level during RTH, but we'll have to see. So you can see again, we got really close. We got to 2450, but we have not tagged that 25 on this one occasion, two occasions, three occasions on this really low time frame basis. And you can also see that you've got a green delta fuel potential trap to get us down for a pullback again before we get up there. So it'll be interesting to see whether or not we now get up there without going and retracing a little bit. But right now I would not want to short. And over in ES we can have a look and see what's happening. It's really just a lot slower in its motion. You've got some support around the 05, 04. So that was resistance earlier today. So if we zoom all the way back in, that level there, the 05 level, was resistance, and now we've got liquidity support at the same level. And here we go, we're at that, and we're through now. And now we're continuing up, and we've had a nice little spike up, and you can see that little vertical spike back down, which has been retraced already. So you can see the move up was not a vertical spike, but the move back down was. And there should be a clear differential between them. You should be able to see that so that there shouldn't be any doubt in your eyes what is a vertical move and what is not a vertical move. And again, that is one of the beauties of using this heat map, and that's one of the reasons why I like it. See that there, that's a vertical move. And don't expect them to come back straight away. Sometimes they can take quite a long time before they come back. It's just the probability is that they will at some point revisit that. I think it's quite a higher probability. We're talking about above 75%. Okay, just double checking any more questions in YouTube or Discord. We don't really have a big number of people today. I know we've got a few in Discord. I'm never quite sure. Sometimes on these Wednesday sessions, I noted last week, I thought it was quite a good technique session. We went through quite a lot of stuff, but maybe we're going to have to label them on YouTube so people are aware what is covered in the content of one of these webinars, because there was a below average number of viewers on that particular one, even though I thought the actual technique stuff was better than some of the other ones that I had done. I'm also told that with the YouTube stuff that a lot of the videos on YouTube are aimed more at beginners, so that some of the stuff that we talk about in these types of webinars are not aimed at beginners. They're not magic indicators. They're nothing like that. They require work and effort and manual back testing a lot of the time, and zooming in and out and understanding the concept of multiple time frames and fractals. And a lot of people are not prepared to do that kind of work, even though it would increase both their win rate, not that that matters that much, and more importantly, their R multiples, or their average R multiples, and thus their expectancy of their business. But that is the way that YouTube is, and there isn't much that one can do about that. But that's not really for me. I mean, I'm not here to bullshit or lie or invent stuff. I'm here to provide hopefully help on technique and also live analysis, and describe what I see in the picture. So what do I see right now in NQ? I've seen that since they lit up this liquidity here at 35 and we're driving towards it, I'm just watching to see what happens in terms of the additional liquidity being provided around those levels. That's where you can zoom in and out, so you can see where that little level at 40.50 was added. Again, I'm not convinced that the RTH morning session will be a trend session. I cannot predict the future, and I've said that many times again. And I'm just looking across, by the way, I didn't notice in ES, but since 8:30, since that news release, we have held that scene of the crime beautifully. Within one tick, maybe 2 ticks, we've lost it, but it's held it absolutely beautifully, and it's going up to this resting liquidity that's been there beforehand at 202, now at 4710. So, did the heat map provide market generated information that could have been useful to an ES trader? The answer is yes, it did. And that's something that I would say that, with every single one of the tools that you use, and you should have your own wiki, you should have your own Wikipedia that you've written describing each of those tools, screenshots where appropriate, and how they fit into your strategy and your trading plan so that you can refer to them, because your memory is not going to be watertight. It doesn't matter how good you think your memory is. It is essential, or it is really helpful to every single trader to be able to go back and refer to things that you observed. And that's one of the reasons why I journal, so that I have things that I can then put into little stub type articles inside a wiki that I can refer to, so that if you see something, sometimes it'll be the formation of an idea for a new edge or a new little mini setup or trigger or something like that that you can use, that might be in play for a few weeks or a month. It might be one of those temporary setups, because sometimes these edges do not last forever. And the fact that you've observed what's gone into play, that is in play at the moment, can help you for a few weeks, and then when you can also observe when it stops helping, and you can then disregard it. Okay, so we're now in this little ranging pattern here. So in NQ, what we're going to do is zoom in, and we're going to watch this delta column. So we're going to see what are they trapped below to get us to this liquidity. So this liquidity here, when it came in, firstly there and again here, they didn't change liquidity, but it's acted as resistance. So the point to note is that these liquidities do have a double-headed demon type of purpose. They both act as support resistance, brick walls, and also as magnets. And you have to accept them for what they are. But I'm hoping by zooming in and out there, you can see, we can see this delta fuel develop, and we can also see this little bit of liquidity below. In terms of liquidity sizes, I like liquidity 30 and above in NQ. I think I'm sure I've said that a few hundred times now as well. Anything below 30 in NQ I take with a massive grain of salt. And yes, I trade NQ and ETH a lot more than I do ES, just because there are more opportunities to make multiple R trades. And why do this if there are not multiple R trades? There isn't much point. It's a very hard business. There's plenty of luck involved. A lot of it is bad luck. There are occasions where you execute really badly. I had a trade after the CPI yesterday. I had really good size on a short, and I did not milk it properly, and it was really bad execution by me. And you have to accept and expect that you will do that from time to time. Your execution of your own strategy will not be perfect. You are a human being, and a lot of what we're talking about here is discretionary rather than automated mechanical stuff. Some of this, I've written a couple of algos to get in that cover a couple of the triggers that I have, and I'm quite happy, provided I have a clear target to let my algos do the entry for me. But most of the time, I'm still manually entering. Let's just zoom in and focus on ES for the last few minutes of this. We've only got one more minute. So we've got this resting liquidity up above at 4710. I thought we'd get closer than 3 ticks. Thought we might get to 2 ticks or so, but we'll have to see. It's just because this liquidity's been there for a while and we've had one approach. And ordinarily, when it stays pretty much unchanged, and we've got a filtered heat map. So this is ES filtered by orders that have not changed by way of size or price level. You can see that little break for the news release, but effectively that's been in place for hours and hours, and it's 181 orders, so it's likely that they'll have a second approach. But again, I'm just observing. I'm not trading until the RTH session. Okay, I think I'm coming up to 9 o'clock, and you can see this support as well at the moment. That's holding us. That support there in ES is trying to push us into this resting liquidity. Let's see if they can do that job. Anyway, I will call it a day there. I hope the information has been useful, and trade well, people, and enjoy the Fed release this afternoon and the fireworks that are likely to happen. Cheers.